Good morning, ladies and gentlemen. Welcome to the pre-CPI mini stream where we'll be looking at CPI and my predictions for the CPI. Welcome, ladies and gentlemen. I welcome you. Let's quickly dive into it. We don't have long. It's gonna be a quick stream. Um, let's get into it, ladies and gentlemen. You know where we all start. Technically, we know what we're looking for and what we have technically and otherwise. But I wish to say the only trade that I still have now in terms of trades, it's my friend here, NZ Decade. I'm still waiting for at least maybe a bullish candle to close above this current high, to hold above, then I can move my stop loss to profit to look for the highs. Unfortunately, the market is still acting up, but that's the only trade I have. Just today, it's pre-CPI. We're just doing pre-CPI. Let's get into it, man, and have our expectations. So I will link for tonight, for this morning. I will link CPI with inflation data and labor data, because those are the things that will determine where we're going next. And we know that inflation has been sticky. And if we're to look at the inflation data that's coming out today, inflation has been sticky. If we get higher number, people will say, if we get a higher labor data, I mean higher inflation data, that will be a worrying thing. Let me just quickly do this. And then what's happening here? Okay, this thing is crazy now. Here we go. So if we get a, a strong CPI data here, there will be a direct indication that we might not get rate cuts, or we might get the same rate cuts. I mean, we might not get another rate cut. We might get the same. We might keep the interest rate the same, given that the inflation is still sticky, going to 3%. Today was 2.9%, going into 3%. That's something that we should note, to be observing today going to CPI, because higher inflation that might cause the Feds not to cut rates, but also not to increase rates. And the fact that why I'm saying they might not increase rates, as ADP data was at minus 34,000, or 32,000, which it says the labor data, it's a bit sticky. And it's a worrying thing to note that the labor data, it's a bit of a problem. Now, even though now we're flying solo, I mean, we're flying blind, given that, you know, Trump and his people, the feds, I mean, the government is still shut. But looking at the last data that we got was ADP, which means the labor data, or the labor market, it's a bit sticky. And you know that labor it's basically labor, it's what causes spending, which what it's good for GDP and the economic growth. So with a bad labor data, Fed might be forced to keep interest rate the same, as much as we know that inflation is increasing, which is a worrying thing for me, because you see inflation increasing and we're still flying solo. I can't speak much about NFP, but the last data we got, that was the 1st of October, was ADP was at minus 34,000, if I'm not mistaken. And that's why I'm saying inflation and labor data are saying something to us that we should be looking at and observing closely, given the fact that if CPI comes lower, here's my prediction, in terms of not prediction, but this is what I think. If CPI comes out at 2.7, 2.7%, coming 2.7 lower than forecast, I think come out at about 2.8, 2.7%. The Feds are unlikely to cut rates. But let's look at the Feds Watch tool here. Let's look at the Feds Watch tool, Feds Watch. I just want to see the prediction so far. Where are they lying? Are they lying on the cutting rates or not? Um, oh, come on, this thing is a bit slow. Come on, be fast. Fed Watch. What is this? I need the SME Fed Watch. Here we go. I just want to see the the predictions so far, where are they lying? How many are for bulls? How many are for cuts? How many are for so, ooh, oh wow. Ooh, okay. So 98.9% are saying we are likely to gonna get rate cuts next week, and the Feds are sitting in October. Whoa, that's quite high. So there, we are expecting about 98.9% are saying we're gonna get rate cuts. It's interesting. This is really, really interesting. On the next watch, okay, wait. Yeah, nope. Possibility of rate cuts are quite high. So that's what they are saying. And this what they're saying here, you could all see this, and it's how it's looking like when you look at the Fed, what do you call this? The 10-year treasury yield. If you look at the 10-year treasury yield, just before CPI, look at that. Just before CPI, the 10-year treasury yield um, has just bounced back to the upside. And you remember one of the first thing to observe when the market is about to when there will be rate cuts or keeping the interest rate the same, it's the 10-year treasury yield. And if you can see, that was a sell off after and then look at that, we rebounds, but now we are rebouncing here. Look at the rebounds coming to the support, but I'm not worried about the technicals here. I just want to show you that before CPI today, we saw this rebounds. And if we get inflation, let me say this, if we get CPI data that it's stable, where it's about 2.8% or 3%, I mean 2.8, 2.7%, the Feds are likely to keep interest rate the same. But my thing is, we see this push to the upside right now. Does that tell us that the Feds are likely to get interest rate to be the same? This are likely to get interest rates to be the same. The Feds are unlikely to cut rates. We don't know. But my prediction is right now, and what I think is, if inflation stays the same, CPI stays the same, sorry, if CPI stays the same, and we see treasury yield move to the upside again, we are likely gonna get we're likely not gonna get another rate cuts for the year. Even though other people are saying we should get rate cuts for the year, but with sticky inflation, I doubt, and that might give us a move to the upside on the treasury yield. And treasury yield are the first to move before rate cuts or non-rate cuts. And this move are saying that we might not get rate cuts. I don't think we might get rate hikes. That I doubt very well until we have direct labor data that will directly give us where we're standing with labor data. That's when we'll be looking at whether we're gonna get rate cuts or not. But for now, I mean, we're gonna get rate hikes or not. But for now, I don't see rate cuts coming. I see inflation staying the same, or if inflation is higher, we will or stay the same, or inflation is higher. We might see the Feds not cutting rates, and that's why maybe the treasury is going to the upside. That's where I am, and that's what I'm thinking for now. I don't know if I've explained it better, but do not forget to like and subscribe. But without any wasting time and tell you anything, as we are going to CPI today, let's look at our macroeconomics and things that we'll be looking to trade today if those trade setup happens. Still the same things. Oh, yeah, ne? It's only indices and all that are bullish. So I told you about my trade, that I'm gonna still stick to my trade even though it's out of that. But remember the trade that I said I have? Remember the trade I have? This is the only trade I have. Oh, look at that. The only trade I have is this one. I just want a direct break above this high. I just want a direct trade above that high. and we can move to a certain direction. But oil, let's look at US oil. US oil is retesting that high, and even if we were to go to 1 hour time frame, it's interesting. The US oil, look, honestly, I will be patient. If it breaks above this resistant area, 10 that to support, I might look for longs on oil. But for now, I'm just watching. And what I'm thinking also, it could come back also to retest this low and continue to the upside. But I really want to see a change in the structure where it trades above this current resistant area. That's what I'm looking for oil. But in terms of, let's speak about gold in terms of CPI. We, if we're to get, if we're to get, let me put this right. If we were to get sticky inflation, let me put it that way. If we were to get inflation about 3%, we are gonna likely gonna get a lower low here. We are likely gonna get something like this. Perhaps get gold another low again on gold, given the fact that if inflation is increasing, Feds might not cut rates. There will be possibilities in the future for the Feds to increase rates in the next final early next year, given that inflation is still sticky, even though it's a water thing because of the labor market, but you don't want prices to drastically increases with inflation. So if you get sticky inflation, high inflation, or gold is likely to roll over again, maybe to look for that support, to look for that support. And when we get this range of gold, I might look to buy gold there, buy gold there, buy gold there long term. In terms of ETFs, I might consider that. But stick inflation, we might push gold lower. That's what I wanted to say, that stick inflation, we might push gold lower. I think that's something that we need to note. If inflation is sticky, high inflation, we move gold lower. But what's going to happen is we might get the dollar to increase, and you know that is directly proportional to each other. We might get the dollar to be a bit bullish, expecting for rate cuts. And then that's why you see the treasury yield as well moving to the upside for now, given the fact that we are unlikely to gonna get rate cuts in the next meeting. So let me say this again: sticky inflation, high inflation, gold will give a lower low. Long-term gold is still bullish, but you know when if gold is moving lower, the dollar is moving higher. What's gonna happen? The stocks benefit because it looks like um, we will move into risk on asset. Do I make sense? We will move into risk on asset. Long term, yes, it will be a problem with high inflation, but for the week or for today again, you could get that move to the upside for indices and gold coming lower, given that we will be anticipating for higher rates or rates keeping kept the same way. So those are the things that we'll be looking at. Um, I am watching closely, but in terms of technicals, just quickly do technicals and I call it a day. Gold, it would be nice to look for gold longs, either here where it is or just at that low to look for gold longs. That would be very nice. But however, gold is not part of any of my watch list. What's on my watch list is Dow Jones. Again, I should say if we get lower CPI, this might just say we might retrace lower before we get a good move to the upside, because lower inflation says we might not get rate hikes, and meaning prices will be kept the same, and there'll be a bit good spending and good spending benefit stocks. So I think now with lower inflation, we are might get that move to the upside, and then we retrace back, and then we push back the market to the upside. So I am watching closely. As I said before, I am looking to go long on the supports areas here. I'm not interested in that support. That support can hold, but I'm not interested. I feel like the risk to reward for me on this support, it's a bit skewed long term, because even if I were to say we get a bad we get a bad inflation data, this retrace to that support that does not give a good risk to reward. And if that fails, I have to wait for all the way back to the low. I just don't like it. I love that this held, but yeah, but let me wait. We are almost at the all-time high. So, and I spoke last night, go watch last night's stream where I spoke about retail positioning. It's very bullish. And once retail positioning is very bullish on something, you directly know that we will be affected. Somehow the market tends to say, just tend to crash or just tend to retrace lower when the retail sentiment is very bullish, but when it's bearish, it tends to move to the upside. So those are things that need to put to core ratio. Those are things that you look at. But other than that, man, that's what I'm looking for. Nothing much. I will just be waiting for inflation. I was just explaining the macroeconomics. Just be looking at the inflation data from there. I will take my decision. The only trade that I'm just holding on, managing, is NZD CAD. Just it's also in profit, but just keeps on. I just want you to trade above that high. If it trades above that high and hold above, I will secure profit. But other than that, man, ladies and gentlemen, do not forget to like and subscribe, and catch you in in the 7 p.m. the closing bell. Other than that, I gotta bounce, man. I have to go to work. I have to do some work. Have a great day, guys. I love you all. Do not forget to like and subscribe. Have a great day. Peace. Love you.